Okay, now we're going to talk about the strategy in action. Basically, the strategy is seeing, as we can see in the candles, most of the times, whenever we take another previous week's low and we close above that low with displacement, we can anticipate next week to have more displacement in that favor. In favor of what? Of the candle direction. So, with that said, we can then go to, for example, daily charts and look for the same things. We can see a swing low formation. Then we would go to 1 hour, for example, and we will go look for market structure. In this case, we have one big displacement, no structure yet, in bullish, boom, and then we go. Destruction of this high, big displacement, and then we will be looking for what? We will be looking for a retracement. Once we retrace to a discount, what's in the discount? This fair value gap. We will be looking, for example, longs as this right here. Our target, you can use targets. For example, you can use targets as highs, or you can use no target and let price go until it needs to go, until where it needs to stop. Sometimes this will give you huge R, sometimes it will be better to take, but in my opinion, the most worth that you can do is if you're in the side of big displacement candles such as this, you should continue to look for more and more longs. Each time it retraces, look for more longs, continue adding into your trades, since this way you're gonna get huge trades. You can enter here again, one time again here. From the structure that we have over here, you can use all of this swing low, or you can use the most close swing. In this case, I would go to the 1 hour, to the 1 week, for example, and we see here it looks like this. In this case, it looked like this, so we wouldn't be expecting to retrace to this low. So I would be going to the daily, looking for that low and looking for a retracement down there. Not expecting this low. Why? Because I already taught you why. We do not expect price to displace below the low if we're continuing to go higher and higher and higher. And again, we also have this big displacement, which we do not expect price just to go ahead and retrace everything down. You can go and see through the history, it doesn't really happen that often. You don't just get big candles like this and the next candle going back to the low. It just doesn't happen. Same here thing. Okay, the same thing here. You can see that big displacement, retraces to the discount. Where do we have here we have an imbalance. We could start looking for longs in that imbalance right there. Stop. It could be over here, not need to be all the way there. Most likely here we shouldn't come back. Why? Because we have big displacement. Price should continue to go into your favor. And in this case, price does continue going into your favor. Now it's retracing again. Most likely going over again for a deep retracement such as here, maybe all the way here, then continuing higher. Okay? But you can see what I mean. We have to focus on big movements with the structure as I already taught you, and we want to see in the daily, we want to see big displacements. We want to put our stops in the structure if we're in a trend in the structure, but also we can put it a little bit tighter if we see that we shouldn't retrace all the way there. How do we know that? Well, if we take, for example, a low, we shouldn't really go all the way down to this low. It of course can happen, such as in this case, but in this case, for example, we had a bit different. Why? Because the structure in this case, as you can see, was broken down here that day. So this week we were not with bullish structure. We will need to wait until this structure over here was broken, which never really happened. So we never had a trigger to go long in this week. That's why we need to mix it up with the liquidity of the weekly, with the displacement of the daily, and with the structure of the 1 hour. We have to blend all of these concepts. If we can do the structure of 1 hour with a weekly bias, such as we have this structure, we're looking for longs, we're looking for longs, we're looking for longs, until when? Until price goes against us. And when price goes against us, then we're done. Okay, for example, we also can take profits if we see price go all the way here. Of course, we're not just gonna wait for price to continue going all the way here. We have to take profits in such cases. But in the majority of the trending markets, we will want to wait the most until we get some price action against us. Because if we end up, let's say, collapsing the trade, we enter, say, here, collapsing the trade here, well, we could probably end up collapsing it all the way here in the other week. Once we see this displacement, the structure being broken, we can collapse the trade, or we can just put the structure, the stop loss on the new structure. So once we go all the way here, we're done, and we're going opposite way. We're trying to look for price to go the other way. And when it shows us the displacement in the daily and weekly bias and 1 hour structure, then we're looking to go in. So we're looking for longs here all the way. When? Until we get some weekly different bias. In this case, we still have weekly bias bullish, weekly bias bullish, weekly bias bullish all the way here, but then boom, retrace all the way down. We don't have any weekly bias now bullish. In this one, we have a bearish bias. Next week, we have a bearish bias most likely. Why? Because we're very likely to close below this low and form a swing high. What happens usually when we do that? We displace lower. Look in the time. When we have a swing high, big displacement down, we usually continue lower. Okay? The same when we have a swing low and big displacement up, we usually continue higher. So that's pretty much the strategy. You have to look for your weekly biases, as I explained, with your daily big displacement candles. You want to see big candles going up, and you want to see the structure in the 1 hour support your idea. That's it, as simple as that. Support your idea, weekly bias, daily big displacement. Okay, that's pretty much it. We can also trade some certain trades, for example, such as here, this trade that I took. As you can see, we're not in an actual trending market, right? But I have a weekly bias. I took this low, we displaced higher. Then we have this big candle, as I explained, that's my stop. Why? Because I know that big candles such as these ones should not be purely retraced all the way down. If not, we're wrong. I don't need to place my stop all the way here. I can place it tighter and look further. Now, if we do close below this high, what can we expect? We could expect this low, yes, but not always. Why not always? It's not like all the time we're gonna get some low being rated down. No. Sometimes when price is really displacing, such as in this case, we can expect just price to continue higher. Also, look at this. This was on Friday. Look at the weekly candle. Which one do you think holds much more weight? the weekly bias, such as in this case the weekly bias, or the daily pattern. Of course, the weekly bias. So the weekly bias in this case, unless we close below this high, okay, this high right here, I would be a bit alarmed. Okay, it's not like I'm gonna be bearish, but I'm gonna be a bit alarmed. Maybe thinking of taking profits instead of being more aggressive and let it run, you know, like let it go, basically. In this case, I'm just letting it go. I'm letting it go. I'm not taking profits. I'm waiting for the highs. Once price shows me the opposite, I'm more than happy to let it show me the opposite. But as of this moment, I'm more likely to keep going higher. So that's what we want to see. In this case, we had the big displacement. Same thing will happen this week if we have a closure above. Let's say we have a closure below and we end up this week being bullish in the weekly bias. I'm also still looking for further continuation, another retracement all the way down to this candle. Why? Because if we go all the way down to this candle, of course we can continue later on, but it's very low probability that it's going to do it cleanly. So I'll just go away and I'm done, right? In this case, that's how you can take also trades that are against the displacement on the daily. There's no displacement, but I can see some displacement on the 1 hour breaking structure. Then we also have all of these fair value gaps right here, which we entered off. Okay, and after we have all of these fair value gaps in which price respects and go higher, we see the price goes higher, right? And the stop is right here because we're not expecting price to just go lower. But most of my analysis was on the weekly because I focus a lot on the weekly. In this case, let's say we took this low and we can see we displaced pretty bearish. But see how Friday closed. Friday closed below. Are we just expecting price to open up and go like this? Not really, okay? We're not expecting price just to go up. We're in a downtrend in this case. And in this downtrend, it's not like we're trending up. Actually, the structure is not even bullish yet. Why? Because this is a big displacement structure. We're not even going to a premium. We just continue going lower. So that's why we want to see displacement. Look at this. We had displacement. And the daily also had a displacement before I considered to enter. And weekly had a big candle in which it's most likely to continue higher than just to reverse everything like it did with this little candle. So that's it, that's the strategy, that's all of the concepts mixed. It's not that complicated. Watch this video and all of the videos I already gave you multiple times, try to learn it and you'll get it. Practice, 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 and that's it. Hope you enjoyed the course and thank you.